ETFs versus individual stocks. Which one's better? Which one's going to make you more rich in your portfolio? By the end of this video, you should be able to answer this and you should be able to figure out what's going to be best for you personally. The good thing about this type of video, and all of my videos really, is that my goal is never to tell you exactly what I think or what I think you personally should do. I'm going to give you a bunch of information, give you the pros and cons on ETF investing, the pros and cons on individual investing, give you my highlights and my thoughts on which one is going to be best just generally, but I want you to be able to make this decision. My goal with any of this in my teaching is always to teach you how to fish, not just give you the fish. So if there's ever anyone out there that's just like, hey, this is the stock you should buy, just trust me, go out and buy it, and they don't give you any information or teach you how to do the research, you're listening to the wrong person. After this video, I have so many different videos on ETF investing and individual stock investing and the combination of both. So whichever one you choose, you have a whole library to help you with your research as you go. So let's start with the pros of ETF investing. And so now when I say ETF, I just mean a fund of investing. That could be a mutual fund, index fund, ETF, whatever. Just make sure that you're finding the lowest fees of those types of funds. But altogether, when I say ETF, I'm encompassing basically the difference between something that has a bunch of stocks within it versus the individual one stock. So pros of ETFs. Number one is diversification. ETFs typically hold many stocks or other assets, reducing individual company risk. Even one ETF can offer exposure to an entire sector, index, or theme. Diversification is definitely the top reason why someone should have an ETF in their investing portfolio. By investing in that one ETF, you're investing in 100, maybe 500, maybe thousands of different companies within the certain specific ETF. Number two, lower risk. Broad exposure helps cushion the impact of any single company's poor performance. If you have something like 500 companies within the ETF and 100 of them do terrible, but then 400 of them do pretty good, that pretty much balances it out. But if you're investing in that one stock, and that one stock is one of the 100 that did terrible, and that's your entire portfolio will drop. Number three, an ETF is just cost effective. Usually they have low expense ratios, or at least the ones that I recommend have low expense ratios, and there's no need to buy multiple stocks individually to diversify. Number four, nowadays they're just so easy to find something that you care about or that you want to invest in. So if you want to invest in technology, there's going to be an ETF for that. If you want to invest in healthcare, there's going to be an ETF for that. If you want to invest in specifically robotics and AI, there's going to be an ETF for that. Number five, which is one of the main reasons why I talk about ETFs so much on this channel and why I call this channel Investing Simplified, is that ETFs just provide lower maintenance. There's no need to constantly monitor or rebalance your portfolio manually. Within an ETF, if the stock within that ETF is doing bad for a couple quarters in a row, then that ETF kicks out the bad or lower performing company and brings in one that's been doing better. And you don't have to do any of that. It does it all on its own for you. So what are some negatives then, or what are some cons of ETF investing? Number one is the lack of control. You own the basket, not individual companies, so you can't exclude poor performers unless you sell the whole ETF. There are certain ETFs that have a bunch of companies in them that just do bad over time, and you're kind of stuck with them, right? Eventually, the ETF will get rid of those companies and bring in good ones, but there may be a year or two where that ETF does perform poorly. Number two, and this is a big one, this is over-diversification. Too many holdings can dilute returns. Even the winners might not move the ETF much. And usually what I'm seeing is people are over-diversified within their portfolio overall. If you have something like 20 different ETFs, each ETF is already diversified enough. So I always recommend to have 3 to 5 of them. If you have something like 20, you're probably over-diversified in just every way possible. Number three, there are fees. There is going to be a fee, even if it's something like 0.03%, there's still a fee there. Whereas with individual stocks, you're gonna see there is no fee. So overall, the big ones for me as far as ETF investing is number one, you get that great diversification. And even more important for me and probably for your lifestyle is that lower maintenance. You don't have to check it every day. You don't have to worry about what the CEO is doing or what competitor is coming up in their space. If you have an ETF, that's a broad ETF like the S&P 500's VU or something like that, you can kind of just sit back and relax and let it do its thing. The con though would be the fee and then also the lack of control. And near the end of this video, I'm going to do a compare and contrast, and I'll tell you exactly what type of personality or what type of person would rather have an ETF versus individual stocks and why. All right, so now let's talk about individual stock investing. So here's the pros. The first one is that upside potential. Picking a winning stock like Apple or Nvidia early on can lead to outsized gains. There's certain stocks that have gone up 500 or 1,000% in 1 year. That's not going to happen with an ETF. Number two is that you have full control. You decide what to buy and sell and when. You're not tied to a preset portfolio. Number three, this is a big one, there's no fund fees. When you buy a stock, it's not going to cost you anything just to own that stock. They don't have ongoing management fees. Number four, this is probably the biggest one for me personally, and this would just be customization. You can build a portfolio aligned with your values, convictions, or analysis. I know a lot of my clients like to do this a little bit more just because certain ETFs have companies that don't align with their values or their ethics. And so by customizing your own portfolio in individual stock investing, you get to pick based off of what you care about most. Number five is tax loss harvesting. Easier to selectively sell losing positions to offset gains. And that one's a bit more complex, but as you get deeper into the investing game, taxes become a huge issue. So what are some cons on individual stock investing? The first one, probably the biggest one, is higher risk. Poor stock selection or a company's unexpected collapse can be devastating. Like I was talking about from before, if you have most of your portfolio in 1 or 2 or maybe even 3 stocks, and maybe they're all technology stocks. Maybe it's like Google and Netflix and Amazon, and for some reason technology just goes down, or a new competitor comes up and absolutely crushes that technology and puts those companies out of business. If that's your whole portfolio, that's high risk and that's going to deplete your gains. Number two, lack of diversification. Unless you build a large balanced portfolio, you're more exposed to specific risks. Number three, and this is a monster of a big one, they're time intensive. It requires ongoing research, monitoring earnings, market trends, and news. And that's just the beginning. It's so hard to know when to buy a stock. It's also very hard once that stock goes up to know when to sell that stock, or if it's going down, when to sell that stock. Should you sell it at a loss? Should you just keep it even though it's been steady for a year or 2 or 3 when ETFs are consistently gaining 10% or something? It's very, very tough to understand, and you need to do a lot of analysis to be good at individual stock investing. Number four, emotional decision making. Investors often overreact to short-term volatility, leading to poor decisions. It's so hard to watch a certain stock in your portfolio go down 30% in the matter of a week. And for most people, that's going to scare them and they're just going to sell out of it, even if this was just something that totally makes sense based off of macroeconomic or geopolitical issues. And so if you don't have the stomach to hold during something like that, it's probably better to be in ETFs. Number five, this is the biggest one. It's harder to beat the market. Most individual investors underperform broad indices over time. So which one should you choose? If you value simplicity and diversification, consider ETFs. If you value lower risk and passive investing, consider ETFs. If you value high potential and control, consider individual stocks. And if you value willingness to research, consider individual stocks. Now, many investors use both. I personally use both. My personal portfolio is about 85 to 90% ETFs, and then about 10% or so in individual stocks. I personally think ETFs is just the way to go, and through all my academic research, it's really, really tough to ever consistently, any long period of time, beat something like the S&P 500 or my 3-fund portfolio. But I do like the customization aspect. It might also just be the business nerd in me as a professor, but I really do like to do the research. I like to look up certain CEOs. I like management teams. I like the competitive analysis. I like watching certain industries. So certain companies I just really, really like, and so I add to that in my portfolio, specifically Berkshire Hathaway and Microsoft. No matter what you choose, consider all of the pros and cons of all of the different things that I talked about in this video and customize the portfolio that fits you and your risk profile. To learn more about that 3-fund portfolio and how it's just the easiest, most simple way to invest to get solid returns, watch this video here or watch this one to keep you going strong in investing and keep investing simplified.